Hi, I'm Steve LaFrance with Blakely Financial, and I'm here to provide some highlights from the third quarter, an update on year-to-date progress, and see where everything may be heading. For most of this year, I've been commenting on how resilient the markets, the economy, and the employment figures have been holding up during the Fed's historic rise in rates to stave off inflation since early 2022. Most of the past couple of months, and for the third quarter, the markets have pumped the brakes and given back some of the gains achieved this year. The summary is simple. Every index, both stocks and bonds, was negative last quarter. I know that's not what we like to see or hear, but market growth isn't linear, and there will always be some bumps along the way. In this case, investors paused to digest the myriad headlines, including student loan repayments resuming in October, the continuation and expansion of the UAW strikes, some cooling off of the AI stock euphoria, a potential government shutdown quickly followed by the historic ouster of Speaker McCarthy, higher mortgage rates affecting home affordability, higher borrowing costs in general for credit cards, auto loans, and business loans, and oil prices have been creeping higher for the past few months. But in spite of all this, the equity markets remain positive on both a year-to-date and 12-month basis. No reason to recite all the numbers, just take a look at this chart here and pause the video if necessary. And for good measure, here's another chart showing how 9 of the 11 sectors posted positive numbers over the past 12 months, with only real estate and utilities experiencing single-digit declines. Looking for another source of optimism? Well, one of our Commonwealth analysts, Tom Loeb, recently posted how the S&P 500 first half-year return suggested a potentially strong year-end finish. Looking at monthly data since 1950, there have only been 13 years where the months of August and September were both negative, with 2023 making 14. In reviewing the 13 prior instances, 10 of those years had a positive October, and 12 of the 13 had a positive fourth quarter with an average return of 9.2%. To put it a different way, historical data continues to point to a rally into the end of this year. But who really knows, right? Picking tops and bottoms is for the lucky and the liars. Patiently holding on to your investments is more important for most investors than timing. Your personal financial circumstances should always dictate how you invest, far more than what you think the markets will do. You don't need to have an opinion on whether markets are going higher or lower in the short run. It's basically impossible to forecast the economy. Even the Fed can't figure out the path of interest rates, inflation, and economic growth, and it's part of their job. So don't let the current volatility and uncertainty rattle you. This is how markets work, and patient investors have always been rewarded. That's all for now. Thanks again for your trust and confidence.